Tired of staring at confusing charts and jargon-filled financial websites? Ever wondered if there's a simpler, more intuitive way to grow your money? Or perhaps you're already dipping your toes into the investment world and asking the crucial question, M1 Finance versus Robinhood, which one is truly the best for you? Today, we're diving deep into the trenches of two of the most popular investing platforms out there, M1 Finance and Robinhood. This isn't just another surface-level comparison. We're going to dissect their features, uncover their hidden costs, explore their unique philosophies, and ultimately help you decide which platform aligns best with your financial goals and investing style. Because let's be honest, best is subjective, and what works for a seasoned day trader might be a nightmare for a long-term, passive investor. So, buckle up, because by the end of this video, you'll have a crystal clear understanding of what each platform brings to the table. Let's start with the big picture. Robinhood burst onto the scene with its commission-free trading, democratizing access to the stock market for millions. It became synonymous with easy, mobile-first investing, attracting a new generation of traders. M1 Finance, on the other hand, quietly carved out its niche by offering a powerful blend of automation and customization, appealing to those who prefer a more hands-off, long-term approach. These two platforms, while both offering commission-free trades, represent fundamentally different philosophies in the investment world. So, where do we begin our deep dive? Let's talk about the core experience, the very first thing you encounter when you sign up. User experience and interface. Robinhood has always been lauded for its sleek, minimalist design. It's incredibly intuitive, making it super easy for beginners to navigate. Opening an account, linking your bank, and placing your first trade can be done in minutes. The app prioritizes simplicity, presenting information in a digestible format. You get real-time market data, watch lists, and a clear view of your portfolio's performance. For those who want to quickly buy and sell individual stocks or explore options and even cryptocurrencies with minimal friction, Robinhood's user interface is a clear winner. It's designed for speed and accessibility, almost like a game, which has its pros and cons, as we'll discuss later. M1 Finance takes a different route. Its interface, while still clean, is built around the concept of pies. Imagine your investment portfolio as a pie, and each slice represents a different investment, a specific stock, an ETF, or even another pre-built pie. This visual representation allows for incredible customization and diversification. Setting up your portfolio initially might take a little more thought and time than Robinhood, as you're designing your ideal asset allocation from the get-go. However, once your pie is set, M1 automates the investing process. Dividends are automatically reinvested into underweight slices, maintaining your desired allocation. This set-it-and-forget-it approach makes M1 Finance incredibly powerful for long-term investors. It's less about the thrill of the trade and more about disciplined, automated wealth building. So, if you're an active trader who thrives on quick decisions and wants to monitor minute-by-minute market fluctuations, Robinhood's direct, real-time approach will likely appeal more. If you're a long-term investor who wants to automate your strategy, build a diversified portfolio, and minimize emotional decision-making, M1 Finance's pie system is a game-changer. Investment options. Now, let's talk about what you can actually invest in. Both platforms offer commission-free trading of stocks and ETFs listed on major U.S. exchanges. This is a standard in today's brokerage landscape, but the nuances are important. Robinhood offers a wider array of tradable assets if you're looking beyond just stocks and ETFs. They were pioneers in offering commission-free cryptocurrency trading, and you can buy and sell popular coins like Bitcoin, Ethereum, and Dogecoin directly on their platform. They also offer options trading, which allows for more complex strategies but comes with significantly higher risk. For those interested in actively trading a variety of assets, including crypto and options, Robinhood provides more immediate access. However, it's worth noting that Robinhood's crypto offerings are still somewhat limited compared to dedicated crypto exchanges. M1 Finance focuses primarily on stocks and ETFs. While they recently introduced crypto, their core strength lies in traditional investments. Where M1 truly shines is in its ability to facilitate highly diversified, personalized portfolios through its pie system. You can create pies that are as simple or complex as you desire, allocating percentages to various asset classes, industries, or even individual companies. This allows for a level of portfolio customization that is difficult to achieve with Robinhood's more traditional buy and sell model. M1 also offers a broader range of account types, including traditional IRAs, Roth IRAs, and SEP IRAs, as well as trust accounts, which can be crucial for retirement planning and advanced estate strategies. Robinhood has expanded its IRA offerings, but M1 still holds an edge in this area for account variety. So, if you want direct access to a broader range of tradable assets, particularly options, and a decent selection of cryptocurrencies, Robinhood might be your preferred choice. If your focus is on building a diversified, long-term portfolio of stocks and ETFs, and you value the ability to automate your investment strategy across various account types, M1 Finance's offerings are more robust. Fees and costs. The dreaded fees. Both M1 Finance and Robinhood boast commission-free trading, which has become the industry standard. However, commission-free doesn't always mean free. Let's break down where these platforms make their money and what potential costs you might encounter. Both platforms primarily generate revenue through payment for order flow, PFOF. This means they route your trades to market makers who pay them for the opportunity to execute those trades. While PFOF has been a source of controversy due to potential conflicts of interest, it's a common practice across many commission-free brokers. Beyond PFOF, here's where the differences emerge. Account minimums. Robinhood has a $0 account minimum, making it incredibly accessible for anyone to start investing with even a few dollars. M1 Finance generally requires a $100 minimum to open a taxable brokerage account and a $500 minimum for retirement accounts. This difference can be a barrier for some absolute beginners, but it's a relatively low hurdle in the grand scheme of investing. With that said, thanks for watching, and until next time.